Good morning, Paul Georgie from Allendale. It's December 11th, Wednesday morning, and day after USDA report. Markets are relatively quiet. Lack of new exciting news to keep us going here, but getting a rebound in the wheat market, soybean market, and corn market a bit here as we talk. The key points from the USDA report: they raised the exports estimates on corn by 50 million bushel, soybeans and by 25 million bushel. They raised the ethanol usage by 50 million bushel, which is quite a surprise, especially with the EPA considering changing the mandate. So that was a surprise to corn, and I think providing some underlying support. On the import side, they also raised soybean imports by 5 million bushel or by 10 million bushel, corn by 5 million bushel for the coming year to make their balance sheets work out. Other news: no farm bill is going to happen this year in the calendar year 2013. The differences between the Republicans and the Senate ag leader have been wide. The Republicans wanted to extend the current bill for another month while they work on it. The Senate ag leader says, no way, we're going to get this thing solved or we let it expire. So that is going to be pushed off into 2014. The news out of Washington, however, is that the bipartisan committee has come together on a 2-year deal that will extend the budget and keep the U.S. government from shutting down again. So that is the encouraging news out of Washington here overnight. Some of the reason for the strength in the grain markets, I think, is the strength in cash markets. We've got lack of farmer selling, bin doors closed, and some processors still need grain to finish out the year. That is what's causing some strength in basis right now. And the thing I have to remind everybody is that typically we get into this last 2 weeks of the year, the processors, end users will accept delivery of grain that is due to be delivered in January, and we'll start to see some movement there. That'll fill some of this needs and very likely tighten this basis up to where we could see some setbacks there as we get into this last half of December. So be aware of that. Futures markets not reacting to more news out of China that they rejected another cargo of corn, and there's 3 or 4 more cargoes that are on the fence right now that could be rejected. Trade doesn't seem to mind, however, thinking that it's just a ploy by China because of the lack of demand and weaker prices for corn that they've got internally, that they will be back buying U.S. corn eventually. But the other news, private forecasters are looking and analyzing at the South American soybean production compared to what the USDA said yesterday. USDA raised total soybean production in South America by about 10 million tons for the year combined, where private forecasters already are looking at about a 15 million ton increase. So still leaves some room for adjustment after that report yesterday. And the big report is going to be in January, where there'll be plenty of adjustments made on this balance sheet that USDA provides us on a monthly basis. In the livestock trade, cutout values in beef were lower, down 40 cents in the choice, select down 11. The cash market has been at a standstill, waiting for some improvement there or some news that we have got steady trade. But right now the attitude feels like we could be steady to a little lower when cash cattle are finished trading this week. The biggest problem that we've got in the beef side of things is demand for product due to this winter storm that's hit the East Coast, concerning that that could delay some movement and back up some beef that normally would be used. In the pork complex, we've seen a much stronger cutout value yesterday, up 147 in the pork. The problem that the pork market has right now is the cash markets are still weak. Hog weights are heavy. The cash index is at a huge discount to the February contract, and that's kind of weighing on the February contract. Deese contract goes off the board this Friday, so limited trade there. There was no cattle deliveries yesterday. Expect continued volatility and expect quieter and more volatile markets as we move toward the end of the year, as volume decreases, large traders even up their books and as they go into the end of the year. So a lot of things going on. Stay in touch with Allendale's research. Make sure you attend the Allendale webinar next Tuesday night at 8 o'clock. We'd like to have you there. We've got some very interesting discussions that certainly could help you prepare for 2014 marketing year. Give us a call if you got any questions, 800-262-7538. We wish everybody a very successful trading day. We'll talk to you tomorrow morning.